All right, thank you everybody for tuning in. My name's Ryan, and I'm with Curtis. I'm a realtor in the area, and Curtis is a loan officer. And we wanted to start an AskALender series. We always get getting questions from clients and people we serve, and so we kind of wanted to start this series to be as helpful as possible and really discuss a lot of the questions, a lot of concerns that we deal with regularly to be as helpful as possible. So to get started, Curtis, if you want to kind of introduce yourself and tell us a little bit about you and your business.
Thanks, Ryan. Yeah, I appreciate you having me. So I'm Kurtis Lay with Cross Country Mortgage. I have been in the real estate business for almost 10 years. This will be my ninth year. And majority of my career has been with Cross Country Mortgage. I just a great company. I love everything about it. They provide everything for us. But I am local to Central Florida. That covers pretty much Orlando all the way to the East Coast, Daytona, New Smyrna. I am a native to Volusia County, so I'm very familiar with the area. Graduated from Deltona High School. Yeah, and so I'm happy to be on here and kind of help educate people out there.
Awesome. Well, thank you so much. So this week we wanted to start off with a question we get, all the time, and obviously a lot of times with first-time home buyers, it's a lot of nerves in the beginning. What do we do? What direction do we go in? And of course, that's where we come in to kind of guide them to those decisions. So, but today I want to talk about FHA loans. FHA loans, over about 80% of those loans go to first-time home buyers, and so they're used quite a bit. And so today I kind of just wanted Curtis to discuss what an FHA loan is. And then also on top of that, we're going to discuss a little bit about what are some of the down payment assistance programs in our state, in our area, and the ones that are most commonly used and that Curtis most commonly employs. So if you want to talk a little bit about that, what an FHA loan is and how it works, and then maybe a little bit about those down payment assistance programs.
Yeah, for sure. Like you said, FHA programs are, it's a great tool and program for first-time home buyers. Majority of my first-time home buyers, I'm putting into an FHA program. It's essentially the broad definition is it's a government-backed product. So essentially, it's regulated by the government, and the government protects the lender in a situation if something was to happen on the mortgage side. So it's great for first time home buyers, one, because it offers lower rates, competitive against your traditional conventional loans. It's great for people who maybe have a credit score on the lower side, because even with the lower credit score, it's generally going to beat out your conventional interest rates. The private mortgage insurance is also going to be lower compared to a conventional loan, especially if your credit score is on the lower side. It is a set percentage based off of the loan that you're borrowing. It does have a little bit stricter on the guidelines, but if you know the rules, it's really an easy game to play. It's not anything more difficult than a conventional loan. You just got to know, what to look for and what the program requires. But it's a great product for first time home buyers. A lot of people can tend to be a little scared on the product side of it, but honestly, I use it all day long. It's great. It offers, client budget friendly options. So I would definitely say if you're interested, definitely get a quote and you can compare. I like to give my clients the option to say, you don't want to look at the FHA option because maybe you've heard something. I'll give you the options to compare FHA to conventional so you can physically see the savings that you would have between the two. So I definitely recommend it. It's a great product. I don't see it going anywhere anytime soon.
That's great, awesome. And to kind of piggyback on that, a lot of people, first-time home buyers, their big question is, well, are there any assistance programs? Things are really tight, and it's tough for people to save for not only their down payment but for closing costs as well. And so, of course, they're always asking about down payment assistance programs. So if you would kind of touch on that, and ones that you normally use and that you normally employ.
Yeah, yeah. So down payment assistance products are great for a lot of my first time home buyers. People think that you need to have all of the money up front, to be able to purchase a home. And so it can be a little bit jarring for somebody who's trying to jump into the market. There are a multitude of different products that you can use. I tend to lean more towards the state offered one. So Florida Housing offers a down payment assistance. We call it a deferred second. Essentially, what it is, it's a non-interest bearing down payment assistance fund that the state is essentially fronting you to be able to cover your down payments and part of or all of your closing costs. So it does sit as a second loan on the back of your first loan, but you don't owe anything additional on it. It is just a second there, and the point of that is the state essentially creates a pool of funds that are recyclable for first-time home buyers, so you can come in, use those funds, get into home ownership, and then keep the home 5 or 10 years, and then when you go to sell it, you do owe the money back, but you gained equity position in your home, which you can now roll over into buying your next property. So it is a great product that I recommend using because it doesn't increase your monthly payments. Like I said, no interest that you have to pay on the down payment assistance funds. It just sits on the back. So on the alternative side, there are what we call as interest bearing down payment assistance. So we call them repayable seconds. And those essentially have an interest that you pay on them monthly. They usually are coupled with your main mortgage payment. And they're usually paid off within the first 10 years of the loan. So if you're someone who doesn't want that second lingering forever until you sell the home or refinance, you can take the option to pay over 10 years that second down payment assistance amount and pay it off yourself if you'd like to. Both are great options, situational depending on what each person's needs and wants are, but they're great options. We have both of them, and I have worked with both of them for many years.
Okay, great. And now when you talk about for the first one, let me put aside 1 second. So when somebody does go to, if they did want to refinance, then that would have to be paid back when they did that refinancing, correct?
Yeah. So anytime you alter the first loan, you would have to pay the second loan back. So if you are trying to refinance to pay it off to get the interest rate down, you do owe it back. But it really is something that like I work closely with my clients on. I don't, I set the expectation up front that, give it a couple years, build your equity position. And then if you'd like to get rid of that second, because chances are in the market we're in right now, rates are going to come down eventually. So you do want to get out of that current interest rate and get lower if you can. But at the same time, you're building like equity, and over the next couple of years, you should be able to put yourself in a position where you can pay that off with the refinance one with the equity position that you've gained.
Okay, great. And then another question I wanted to ask, kind of similar is, a lot of times when I doing that initial consultation, a lot of my clients will say, well, what about a first-time home buyer's loan?
I mean, I would say, on a general, speaking, there really is no specific one that's for first-time home buyers. You can be a first-time home buyer and use FHA, conventional VA, or USDA. It really it's situational to what is the best benefit for you. So let's just say you do have, top tier credit and, your debt to income ratio is low. You may fit better in a conventional loan scenario just because, the pieces that fit together give you a better payment option. But as a first time home buyer, we just look at that as really a definition. And it's somebody that has not owned a property in the last 3 years. So you can be a first time home buyer and take advantage of any of the products. Again, it's just dependent on your scenario, what you need, and what your budget is.
Awesome. Okay. Well, I think those answered the questions, and so hopefully that'll be super helpful out there. If you have any questions, please comment below. We'd love to hear from you. And we'll see you on the next video.
Awesome. Thanks, Ryan. I appreciate it.